You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That means it's time for yet another episode of the Option Block. Everyone's favorite. I know it's my favorite. Hopefully it's your favorite too. Episode for all things options related, our little bi-weekly sojourn into the realm of options. My name is Mark Longo from theoptionsinsider.com. And of course, I'm beaming to you from the Options Insider Studios here in the Options Mecca of the known world, Chicago, Illinois. A bit frosty this time of year, but it is January. C'est la vie. And new year means some new tweaks to the show. We'll have a nice little shiny new intro for you. We'll be playing around with some other stuff on some other episodes, I'm sure, too. We also have a fun guest. We'll get to that as well. And of course, you can find all of our coming up on 500 episodes. Yes, listeners, we are approaching the 500th episode spectacular. So we have to figure out it's going to be in late February. They're going to figure out what we're going to do for that 500th episode spectacular. So stay tuned for more information on that. In the meantime, you can go check out all 490 odd episodes there on the website. Probably the easiest place to find them, theoptionsinsider.com. Of course, you can always go to iTunes, TuneIn, Stitcher, wherever you find your favorite podcast programs. And if you just want to have it mainlined to your device of choice, then grab our mobile app, available on pretty much all of the major platforms, iOS, Android, even the Kindle Fire, Amazon Fire ecosystem. And of course, while you're using the app or listening, streaming from the website, however you get it, we love to hear from you guys. Send your questions, your comments, your emails. We love to hear from you guys. And joining me on the program before we get to our special guest, let me welcome in, first off, my usual compatriots, my partners in options crime. We'll start off in order of the intro. We'll go with the man himself. You know him, you love him, as Uncle Mike Tussaw, newfound, newly invigorated options author extraordinaire. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a Thursday.
Yeah, Thursday's fun. I know you don't get to do your strategy block, but we get to do some listener mail, so that's always pretty fun as well. And things are going well in the land of going long?
They are.
Check it out, listeners, over there on Amazon if you haven't done so already. Newly updated version for 2016. And also joining us, not an options extraordinaire, but he's a hockey rink creator extraordinaire, the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, I'm sure these freezing temperatures are a boon for your booming ice rink business.
I wish it was extraordinaire, although I do have ice. I actually have ice. It is a very small amount of ice. I believe I am in the ice starter kit.
Does one rink qualify as a business? I'm not sure. Maybe.
I think I have fairly happy children, but other than that, the business part is it's kind of like the wine business. You don't get rich going in the ice rink business. Just doesn't happen.
Unless you have that chain of Giovinazzi ice rinks just dotting Maine. That's when the money starts rolling in, sir. See, I'm a few steps ahead of you. People will know.
We're hoping.
People will know when they look for quality ice, they look for Giovinazzi ice. There we go. Perfect. See, I got your tagline written up already. I got the business plan all lined out. Just check your email for it, and my invoice will be coming forthwith. And also joining us, he's been on before. We're happy to bring him on again. He's, of course, you guys probably know him from his weekly forays on our network in the old Options Playbook radio program where he breaks down the titular options plays for you guys to use at home. He is the senior options strategist, a.k.a. the options guy over there at Trade King, Mr. Brian Overby. Brian, welcome back to the Option Block program. It has been too long.
Well, thank you. I'm happy to be here.
Yeah, a lot of fun stuff to talk about. So without further ado, let's dive right on into it and get on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name says, this is the portion of the show where we break down what was rocking and rolling on the old street today, and it was indeed quite some rocking and rolling. We are recording this on Thursday, January 21st, for all of you out there playing the home game, and what a day it was. It seems almost like a broken record now. We sell off, we rally, you sell off again, we rally again. Yet that's exactly what we saw going on today. Well, yesterday, of course, with the big pronounced sell-off, the world was ending yet again. Most of the major indices off somewhere in the neighborhood of 3% or close to it. And then, of course, today we have the anticipated rally, ECB stepping in and perhaps lighting a bit of a fire under the old market. So we rally, we give some of that back, we rally some more. Quite an interesting day on the old street today. S&P's closing up about 0.8 of a percentage point or so, or around the 15 handle level. They had a pretty interesting intraday range too, about a 40-odd handle. The S&P is getting as low as about 1848, and that's about as high, flirting with 1890, never breaking it, but flirting with it ever so briefly, and closing in the low 1870 range. So a lot of stuff, lighting it up, a lot of stuff to talk about, even with all this back and forth. We are rallying, so VIX is programmed to sell off, and it did indeed today, off about a handle to 2661 out there in VIX cash land. Yet those close-to-close numbers belie the activity that was going on today. And Brian, since you're our guest, we'll give you pride of place. A lot to dive into, a lot to sink your teeth into. What in particular caught your eye in today's activity?
Volatility overall, the way that it has just remained high, actually since the 15th, if we just stay with the VIX theme. If I go all the way back to like the 15th of December, we basically stayed between 20 and 30 the entire time. So the nervousness has been out there in the marketplace. A lot of talk about China. I mean, I can't believe the differing opinions as far as if China matters or if China doesn't matter. And I guess I've learned more about the Chinese marketplace than I have in a long time.
Yeah, we're all becoming experts on Chinese internal politics, Chinese internal financial regulations, and all sorts of other things. I suppose it's somewhat inevitable when they're delivering a 1.5% to 3% sucker punch to the market every other day. Pretty much China's going to be the inevitable talking point here. And yet again, of course, yesterday causing yet another sell-off. It is kind of like that bit of a broken record. We sell off about somewhere in the 1% to 3% range, 3% being kind of the extreme. Then we rally a bit, and then we get another gut punch somewhere else out of China, and it's a back and forth about circuit breakers. And you're right, Brian. Is it the worst? Is it the end of the world? No, China isn't really that important. These issues aren't that big. It's some sort of issue with their internal circuit breakers. They set them too tight because there's not enough float in their markets, and so only about 35% of their shares actually float freely versus about 90-odd% in the U.S. markets. The rest is tied up in big government blocks and things that don't really trade. So the circuit breakers were too tight, et cetera, et cetera. You can really get lost in the minutia over there, and it's certainly interesting. But yeah, it kind of seems like China. Unfortunately, we're all looking forward to an interesting earnings season, kind of putting the spotlight, the focus back domestically, and China and the Middle East and crude and Yellen and everything else have kind of stolen a lot of that thunder. Now we'll turn our attention to the hinterlands of Maine. Mr. Rock Lobster, a lot kicking off in the markets yesterday, indeed today. Of course, markets vacillating a bit today, but ending up strong after the big sell-off yesterday. VIX cash inhaling a bit at the end of the day, but a lot going on intraday there as well. What caught your eye in today's activity, sir?
Well, what really caught my eye is the fact that volatility is not really coming down. Like, it's going down, right? So VIX is lower, but the volatility futures, I'm looking here on the close, didn't really make a substantial move. I'm just looking at the end of the day, like all of the vol products were moved fractionally, and I mean fractionally. Feb future today down. Oh, okay. Sorry. I made a mistake. Feb future up 20 cents. Now, after the close with 1 minute to go, it was down for a little while. I think all the vol products are actually now probably up. Yeah, they are. So, yeah. So market up a little bit, volatility not coming down. So when you're talking about, the sucker punches happening, yeah, I think they're still waiting for another one to happen. And to be honest, I would not be surprised if we didn't have another one tomorrow, because whatever's causing this volatility, I feel like it has not revealed itself yet. And generally, when you're looking at volatility, it's generally, it follows some kind of arc of activity, right? Where, you had August, you had that huge gap. Nobody really knew why the gap was, and the volatility sort of maintained itself for quite a while until everybody kind of figured out, well, what happened was China devaluing kind of at a bad time, I must have set up some sort of confluence of events with some algos or something on that open that day, because basically there are no bids for anything. So maybe it was just a mechanical thing. We've had volatility since there's been worries about China, another devaluation, the Fed's rate. The Fed basically is getting out of the QE business. And while I think the market rallied initially on that, like, hey, they're getting out of the QE business because that's good. And I think Tucson and I were talking about that at some point. Yeah, we did get the relief rally. And then all of a sudden, the worries about oil, China, who knows what the heck is going on. I think that's the biggest problem. Nobody really knows. And, all that stuff kind of snowballed. You had the SPX was around, 2080 or 2075, which is still pretty high, and gone. And we had 200 handles off of it, peak to trough. So I don't think what has caused our sell-off has really materialized yet. And that's why the VIX futures are still in the mid-20s, why the VIX is still in the mid to high 20s. And I think, you've done pretty well fading just about every rally we've had. And it doesn't look like that's going to change, I have to say.
Yeah, I can't disagree there. If you're out there blasting away at vol, thinking this is the peak of volatility, given the fact that we're seeing 1% to 3% swings in the market just about every other day, then perhaps you're poised for yet another sucker punch. By the way, I like how you said that. The source of the volatility has not yet revealed itself. Sounds like you've been watching a few episodes of Star Wars. The Dark Sith has not revealed himself to us yet.
You know what? That's totally where it came from, man. It's topical. It's topical.
I love it. I think we may have a title for the show in there. The source of volatility has not revealed itself.
You got to go with that.
That's pretty good. To the Jedi. I love it. The dark source, the Dark Sith of volatility has not revealed himself yet. The Emperor has not revealed himself yet.
The Emperor of volatility has not revealed himself.
I love it. I can go down this rabbit hole all day, but instead I will turn for salvation towards Uncle Mike Tusaw. He forever of the light side contingent. Uncle Mike, in addition to searching for the dark source of the volatility out there, what else caught your eye in today's activity, sir?
I can't wait to see that in the show titles on the mobile app. The search for the dark. That's going to be a great show title. I hope
for the dark side of volatility.
Yeah, I would download that episode. I would not even know what that show was, and I would download it sight unseen.
I totally would too. But in terms of being from the side of light, I think that what's been going on over the course of the last couple of weeks, it obviously has to do with oil, with China. I think that we are in a worldwide margin call that keeps continuing, and that a lot of people have holdings in oil, and that's driving things down. And the fact that we have what we're doing with that, for example, I was reading an article in that a lot of countries that have a lot of commodity-based countries that have oil or that have holdings in oil, they've had to sell a lot of their holdings in U.S. equities and things like that just because of what's been happening. And so I personally think that this pullback is a little bit overblown, but I am the eternal hopeless bull. I totally get that. I understand that. And with that being said, I do respect the market in terms of managing risk, like I've been talking on the show for almost 500 episodes now. But I really believe that if you're looking for a place to get into this marketplace, right now I think would be a very good time to start selling some puts. Volatility is higher at this point, so you'll get a better bang for your buck, so to speak. And if you're looking to sell some puts on some high quality stocks that you plan on holding for a long time, this could be a phenomenal time to enter. I just remember saying this exact same thing back in around early fall, late summer, early fall, when we had the pullback last summer, just talking about Johnson & Johnson, for example. That's down to $95 again. There's a lot of very high quality stocks that are down at this point that if you're comfortable owning them for a longer period with higher volatility and high quality stocks, I think this is a great put selling environment right now.
Wow, Uncle Mike talking about blasting out puts. Maybe I should take away that light side cap and put on the dark side robes for you as well, sir. Leading towards the dark side of premium selling. I like it. Interesting stuff. Maybe the worm has turned. Maybe volatility is a bit rich. Maybe things are interesting. When Uncle Mike's even talking about blasting out some puts out there. Interesting stuff, sir. Speaking of interesting, what's been going on out there, we were looking at a lot of interesting, all the headlines that are being made in the back and forth in the marketplace these days. One of the ones that caught our eye, we don't talk about underlying trading that much, but interesting data coming out of our friends over there at Bloomberg today, looking at short selling and how it's performing versus actually how you might think it might perform. Obviously, not a bad time to be short right now. Market's selling off pretty aggressively, but they also dug into the numbers a little bit, and they found that the top 10 names that had the most expensive, hardest to borrow, most expensive to borrow, aka the most popular from a shorting perspective, also perhaps known as the most hated stocks out there, dramatically underperforming the market last year by about 26%. Back in 2008, in the big meltdown, they only trailed it by about 19%. So even underperforming that pretty dismal year from a market perspective. And so far in at least the 2 weeks we have behind us now in 2016 or so, they're underperforming by yet another almost 7%. So perhaps kind of contrary to what Uncle Mike was saying about maybe sell some puts and some names you like that you want to buy and have for the long term. Maybe you want to kind of avoid these names because they're not showing any signs of letting up from the downside perspective. So some interesting stuff rolling around out there in the land of short selling. If you're one of those so inclined, then perhaps take a look at that as well. Aside from that, Brian, I know you're keeping watch at a lot of interesting things out there, and we were talking a lot of things are kind of ebbing and flowing in the marketplace right now, not just net S&P implied vol, aka the VIX, but also the vol in some of these individual names. I know you've been watching some of these names. I think Amazon's been on your radar of late. So what's been catching your eye out there from a vol perspective out in Amazon lately?
So you must have listened to Options Playbook Radio this week,
Just
I
maybe.
guess.
Just perhaps. I may have tuned in once or twice.
Okay, so if you look at what I've noticed above and beyond just high implied volatilities, and this kind of feeds a lot into Mike's comment in that when you look at the vol in Amazon and you start at the money and you start getting into the in the money and start looking at some of the out of the money puts, and you look at how much volatility skew there is, it's amazing how much vol is in these big, huge stocks like Amazon when you get way out of the money. And I'll give you a great example. And these were some of the options that we talked about on Options Playbook Radio. But if right now Amazon closed today at 575, we're taping this on Thursday after the close, it's 575. The at the money straddle is trading for approximately $12. I go with 1 day remaining. Tomorrow is all that you have left in these option contracts that expire, and I go 12 points basically out of the money on that, and I can see the 12 points down from 575 is the 557 put, right? So a long straddle, that's basically what the expected move is over one day. That would be the over under, if you will, as far as what Amazon would be expected to do tomorrow. And I see at that point on that option contract, I'm seeing that option contract trade for at the midpoint about $1.25. I mean, that's a lot of premium for one day, even in a stock like Amazon. So you could even go further out and still you could go down to the 550 strike, and you can sell that for 55 cents on the bid. There's just a ton of skew, which really shows to me that people are really nervous in the marketplace. They're coming out and they're buying a lot of out of the money puts on these bigger stocks specifically, but this also gives you some opportunity. So one of the trades that we did this week on in our midday market call on a Tuesday, when we talked about Amazon, because that's kind of been the theme. They're one of the, it's starting off the earnings season, and we've only had, I think Netflix is the only really big stock that is announced, and Amazon's going to be announcing next week. But we were able to go like 50 points out of the money and sell a credit spread for 40 cents. It's just crazy how much juice there is and how much skew there is on the out of the money puts. I mean, I think that's the one thing that really is kind of amazing to me, beyond the fact that the volatility is just hanging around, is look at those out of money puts and look at the skew in them.
Yeah, I'm looking at these, and you're right. Even those 550, 25 handle out of the money puts. I mean, you might expect them to have a bit of a bid if these included the earnings, if these had some earnings premium in them, then I can maybe understand some of this richness, because Amazon has a tendency to fling around earnings, but these go out tomorrow. There's not an earnings in sight for these, and people are still bidding these things up 50 cents at 60 for the 5.5 puts. 2,000, nearly 2,100 traded today. So people wanting themselves some 5.5 puts out there in Amazon.
Right, and it's
Brian.
well over the expected move. So like as far as probabilities, if I went in and looked at the probability, and let me kind of pull that up here. Actually, I can do that fairly quick. The probability of that 550 put being out of the money, give me 1 second here, is 92% based off of the vol. And you're still getting 55 cents on the bid for that. That's kind of crazy in my world.
Yeah, I mean, even if you look at the depth of the sell-off yesterday, which was, the close to that 3% range, when Amazon was taking it on the chin the most, these puts did go in the money at that point. They went in the money because they hit 547, so they were about $3 in the money. But still, that was the lowest end of the spectrum. So maybe that's also why people are lighting up on this 5.5 strike. They think even if the worst comes to pass, that 550 strike is about maybe close to where things will settle out again. Who knows? It's always hard to intuit reasoning when people are trading 25 handle puts with a day to go. But still, it's you're right. Interesting stuff nonetheless, and very rich. So if you are, as Uncle Mike said, someone inclined to try to harvest some premium, perhaps Amazon is one of the potential targets, and especially if you're doing it the way Brian's outlining here or in some of his other programs here on the network about doing it in a risk mitigated, so you're not just coming out and just blasting out puts naked, then probably an intriguing name. Speaking of intriguing names, we could talk about a lot more about what's going on the street today, but we've got to keep rolling with the rest of the show, and it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. You guys know the drill. This is the portion of the show where we break down the weird, the wild, the whimsical, the wondrous, the downright just what the heck is going on out there kind of paper that's lighting it up today. And if what we were just talking about, those 5.5 puts out there in Amazon, a wee bit too rich for your blood, don't worry. We got you covered here with our first name. Going a little bit the opposite side of the spectrum, more of the I wouldn't say value because there's not much value there, but more of the thrifty side of the spectrum. This would indeed be NewCastle Investment Corp, ticker symbol NCT. Closing today, a whopping $3.29. Rocking and rolling, though, as these little names tend to do, up about 40 cents or 13.5% today. So interesting day, I should say, out here for Newcastle. This is the name that's been averaging about 900, nearly 1,000 contracts a day. Today, doing a little bit more than that, to the tune of 18,240 contracts. And of that total volume, 18,240 of them were calls, not a single put. So it's an 18. This might have a record, Andrew, for our highest call to put ratio ever featured on the show. 18,240 to 1. Or to zero, really. But yeah, no puts to speak of whatsoever out here. So that should give you some hint, some indication of what caught our eye out here. Listeners in particular, look like a bit of vertical, in particular, all the way out to the May expiration cycle. It was the May 3-4. Yes, the May $3, $4 vertical spread going up. Looks like paper selling 9,110 times. Selling the 3, buying the 4, doing that net for 30 cents, where the stock went out at about 330, so right around where it was trading there. And looking at the open interest, about 10,000 open on the 3s and about 12,000 open on the 4s. So it looks like we have a friend perhaps deciding, discretion being the better part of valor, deciding he doesn't want to be tied up in NCT any longer. Maybe he's deciding this is about as good as it's going to get, and it ain't that good, so he's getting out while the getting is modestly better than it was a few days ago. Whatever his reasoning behind it, looks like he's getting out of this vertical he put on a while back out here in NCT. Mr. Rock Lobster, this one doesn't really bode well for the enthusiasm about the future of this $3 name here, where our friend kind of taking his money, taking his ball and going home.
I think this is like a little yield play. They pay like a 40-something cent dividend. They were selling a call. They probably thought, the stock wasn't going to go anywhere. Then all of a sudden, it got to the strike, and they don't want to lose the stock. So I'm feeling it's kind of yieldy, and maybe the name made a move back too fast, and they're covering. That's what I'm sensing. Although I didn't see, we're speculating, but we've seen a lot of these kind of call sales against these REITs and MLPs. When the MLP space, it's been pretty much of a disaster to do it. But the REITs seem to be holding up a little bit. So I think, though, they're covering their short spread and saying, I'm done. Done.
I like that, yieldy, a new technical term to add to our lexicon here on the Option Block program. Yieldy, that's a yieldy kind of trade. We're moving out to another one. Not really. You can consider it yield, I suppose, but not perhaps. We're moving on out into the realm of APC. No, not those makers of all your favorite battery backups. No, it's instead Anadarko Petroleum Corporation, closing today $33.55. Up about $3, so not a bad day for them. Up about 10%. Not surprising. Oil moving about 5%. Some of these oil-related names getting a bit of a boost, a much-needed boost out in that sector, if they've been just taking a drubbing of late. Yes, another technical term out there. It's the name that's been doing about 15,000 contracts a day, doing about 3x that, a little over 45, actually about 48,000 out there. About 2-to-1 puts over calls. That should give you some indication of where our attention was drawn here in APC. And we're not talking close to home this time, talking a little bit farther out, in particular, Jan 2017, all the way out to Jan of next year. We saw the Jan 2017 25 puts lighten it up to the tune of, when we started looking at these, nearly 5,000 going up for $3.80, paper selling. As the day went on, we saw multiple large blocks going up over there on ARCA, to a total of nearly 24,000 going up on this strike, with open interest of just about 500 contracts. So clearly this is open in paper. And referring before to yield type plays, we have a friend here saying, I'm taking my nearly $4 and I'm going to sit on this baby and draw this nice line in the sand here at the 25 strike, minus, of course, what I caught for the put there. And we're going to have a nice little line in the sand in APC, this far, no farther. And if it drops below this, you know what? I'm going to buy myself some of that APC at these levels. And looking back over the past year, it's kind of hard to argue with his reasoning. Perhaps he's saying he's going to give himself a year for oil to rebound, and that's kind of in line with what we're seeing out there in the big WTI and other futures options products as well. Market premium in the downside on oil still, even with these movements we've seen out there all the way out to the end of 2016. So it seems there are structural concerns all the way out to the end of this year. This trade kind of echoing that a little bit and saying, hey, I'm going to give myself a year for this thing to rebound. And by Jan of 2017, hopefully I'm going to have a nice nearly $4 in my pocket, or I'm going to have APC at a pretty darn steep discount to where it's trading now. Mr. Rock Lobster, what's your thoughts here on our friend drawing a pretty sizable line in the old sand on APC?
Do you remember the guy that bought butterflies in here, and like the 90, 110, 130 or something like that last year?
Vaguely, yes.
When there was like oil was like $60, and everybody's looking for the bounce.
Yeah, 60 was the first big bounce moment that everyone lined up on, and they all got just wiped out.
And they got totally taken out. It feels like it's the same guy or girl, whoever.
You think he learned his lesson?
Like, you know what? I wasted $3 on the fly 50,000 times, so now I'm going to sell some puts, try to make my money back.
He went out, spent years raising money for his fund, blew it all out on those flies. Now he's spent another year raising money again, and now he's just going to write some puts for a year. And he's doubling down on his APC.
Exactly. So anyway, that's what that looked like. It was weird as things went up at like funky prices and sold last and this, that, but it looks like 20-something thousand ended up going up. But maybe we'll have a little more color on this.
Yeah, we got some time. This one's going to play out over the course of the next year, so perhaps we'll file this in the to be watched category, along with a lot of those downside plays we're seeing. At a certain point, something's got to capitulate out there in the realm of crude, and either it's got to rebound or it's got to at least have some sort of stabilization. And our friend here clearly feeling that traces back in APC to around that 21 and change level out there. And I guess looking at the chart from a year ago, and it was trading many, many times that, it's kind of hard to argue with a scoop at those levels, even if you got to tie up some capital for the better part of a year to do it. All right, and let's wrap it up here, switching gears to the realm of parcel shipping, in particular UPS, closing today $89.07, about 40 odd cents up on the day, or about 4/10 of a percent. This is the name that does about 15,000 contracts a day, doing nearly about 53,000 or so today, about 13.5 to 1 calls over puts. It's not the cool 18,000 and change to 1, but we'll take what we can get. And a lot of that activity, again, coming up on the longer time horizon, listeners, all the way out to Jan 2017 once again. And this time, yet another vertical. This time it was the Jan 110-120 vertical that caught our eye, going up in 2 blocks on the Philly. The initial kind was 10,000. It looks like paper buy-in for about 93 cents. As the day went on, it looks like about 2x that went up, so about a total of about 20,000 on both strikes. That's open in paper because there's only about 13,000 open on the 110s and about 16,000 open on the 120s. So someone out here thinking there's boom times ahead all the way out through next year, perhaps, on UPS. And given the open interest, perhaps someone piling in on a previously established trade he already had, saying, you know what, I really like this one now, and I'm going to do it for a lot more out here. Either way, he's looking for some size upside here in UPS, and it has flirted with those levels as recently as October of last year. It got into about the 107 half range or so. That's about as close as it got over the past year to that 110 level. But if it retraces near there any time in the near future, then our friend here will be sitting pretty on those verticals. Mr. Rock Lobster, take us home here. Long-term vertical call love here in UPS. Perhaps the prospect of rising oil doesn't apparently frighten him to get long some longer-term UPS.
The thing is, how much is oil going to rise? They're giving it away in North Dakota, I think, at this point. So it looks like they're looking for something to get back up into for UPS to kind of catch fire again and get back into the $100 range. So I don't think it was a bad, risk reward type trade. Plenty of time, and but 20% is a pretty good move for UPS, even though it's a year. It looks like I think they're just putting more on.
Yeah, a bit of a piling on. They liked the initial 10,000 or so they had, and they want to do a few more. Speaking of a few more, Brian, I know this one seems to have caught your eye up there in the land of Trade King. What is it that caught your eye about this fairly long-term vertical out here in UPS?
Well, in the thing about UPS is, it's a fairly recession type proof stock, and they're just looking for stocks. I mean, obviously going this far out of the money, you're talking about a situation where the probability of it getting to the 120 strike, if you just look at the math, is going to be very low overall. But then again, once again, if you've got that low probability, you're not spending a lot of money on it. So what I see from this trade is that they're just giving themselves a lot of time. If you're going to be trading leaps in January 2017, you ideally don't even want this thing to go to 120 tomorrow, because it's really not going to pay you that much relative, because you have so much juice in these leap options. The other thing is that I can understand why they did the spread too, and that volatilities are as high as they were, even like looking back at I'm sorry, I just lost the symbol. The APC trade, when you got vols on leaps, the volatility in the Vega is just so large that it just kind of makes sense to sell things this far out. And what a lot of people don't think of, and when you see it, you think of these as astute investors because they're doing such size, it doesn't necessarily mean that always that they are that astute, but they're making plays on volatility too. And Vegas are very large on leap options, especially out of the money leap options. And that's what I've seen from both of these last two trades, is that these people just in general can probably capture more money in the short term just from a volatility crunch on these longer term options.
Well said, sir. Unfortunately, we'll have to leave it there because it is Thursday. I know a lot of our listeners want to hear their questions on the old mail block. So without further ado, let's get right to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill. You guys know how to reach out to us by now as well. The website, probably the easiest place, theoptionsinsider.com. Post a comment, use the website feedback form, etc., etc. At Options on Twitter, The Options Insider on Facebook, or Options Insider on Stock Twits. Questions at The Options Insider for those of you so inclined to use email, or you can just grab our mobile app. It's all baked in there as well. No shortage of ways for you guys to make yourself known. Starting off with... we got so many. Where to start? Let's start at the top. How about AV56? This one actually, I think we talked about this on our Options Bootcamp program a few weeks ago. I thought it'd be a good one to discuss a little bit here on the program too, given the time of the year that it is. He writes, what's a good time to start trading options? Is there any certain time of the week or year that options traders are focused on? This is an interesting one. I think we're all kind of dyed-in-the-wool options guys, so maybe we're the wrong guys to ask, because we're always going to say anytime is the best time to start trading options. But that said, we are here at the beginning of the year, kind of kicking off a new trading year in somewhat tumultuous fashion, but c'est la vie, we are doing it nonetheless. So maybe interesting time to start talking about. People maybe have New Year's resolutions. They want to improve their finances, and this may be a time a lot of people are maybe thinking about coming, or at least dipping those toes in the options market, learning about these products a little bit more. Brian, you're spearheading all the educational efforts over there in the land of Trade King, so I'll let you run with this one a little bit. What do you have to say to our listening friends? There's a couple of ways you can parse this. You can talk about it kind of in general, what time of year like do you think is a good time to maybe start embracing the product, or also maybe on a more gradient level of maybe times of the week that are more beneficial for options traders, given the ebb and flow we see with the weeklies now. So whichever way you want to carve it up, or maybe both.
Anytime's a good time. Just kidding. Okay, that's just kind of boring.
How did I know
so
you were going to lean that way?
Think about as far as the times of the year and start out on the big picture. I always think the end of the year. We're already in January, so it's the beginning of the year. But in December, it was always a great time to think about options because of the tax benefits of it. A lot of people worry about wash sales. Like if I buy this stock, I sell it, it comes back. I jump back in, and I end up having a wash sale. So in other words, I still have to pay taxes on any capital gains that I might have. Option trading in general is a great way to hedge your risk going into new year on stocks you have big capital gains on, albeit just buying a protective put option or selling a covered call against it. And what I really like people to start when they're starting to trade options is to use options to enhance their stock portfolio as opposed to just buying options outright, like doing that fancy iron condor or just doing a credit spread. Look at your stock portfolio and learn the basic option strategies and learn how to use them to hedge. And there's not a better time to do that than going into a new year. Now, is the question then come back and say, well, what expiration? Or are we just really talking about the great time of the year to get focused on options? And if there's only 1 month that I could pick, I would say the month of December, when you're looking to try to put off some capital gains into the new year.
Interesting. Good perspective there. People always say January because it's the easiest point. People are more, inclined to embrace and learn new things. But from a practical perspective, December certainly has its selling points as well. Uncle Mike, I'm sure you have some viewpoints on this one we have to say to our friend here, Mr. or perhaps Mrs. AV56.
Well, I agree with Brian in that it's always a good time to trade options. I've never met a day there's never been a day to where I've made an option trade and I've regretted making the trade. Well, I guess if I lost money on the trade, I regretted it.
I find Saturday doesn't work very well for me.
Well, that's because you just don't trade the right markets.
Oh, you're right.
Anyway, I think that in general, I agree with what Brian's saying in terms of using it for December. But if you're just looking to be a trader and not necessarily looking to enhance your stock portfolio, if you're looking to do more of the fancy strategies, so to speak, then I do like January because of the fact that it's easy to track at the end of the year. You can say, hey, I made this much this year, I lost this much this year, and you have a calendar year with which to do it for that reason. And to expand on it a little bit, in terms of a certain day or a certain time or a certain week, let's say that you are going to be a fairly shorter term trader, which I delve in from time to time. If that were to be the case, let's say you're selling weeklies. Well, I prefer to sell options if I'm doing a weekly on a Monday or a Tuesday. And the reason is I don't like going into the weekend, if I can help it, as an option seller. We've talked about on this show before how some people think that, I need to get that free theta over the weekend, so I'm going to sell on Friday 1 minute before the close. Doesn't exactly work that way, and I'm not going to belabor that point, but I think that if you are going to do shorter term options, I like doing them earlier in the week, so that way you can get a little bit of time decay going before the dreaded weekend, and perhaps if you get the move that you want during the week, you can get out of it before the weekend if possible. So I think those are the time frames with which I like to look at the option world.
Yeah, that's the only thing I would add to the weekly timing issue. You talked before on the show, and it used to be much more pronounced when the weeklies first kind of came into vogue a few years back. There was just mass blasting away at the bids. As soon as they were listed, people were just using them as premium harvesting instruments, and they would crush them and actually over-crush them to the point where by Friday afternoon, if you were so inclined, you can actually buy some weeklies and get a free weekend out of it. Sometimes they had already kind of decayed them into Tuesday at some point. So always got a nice little pop on Monday morning. It was kind of a free weekend's worth of a roll of the dice, and maybe even into Monday. That's settled down somewhat these days, where people still have that misperception that Friday afternoon is a good time to sell. And all the data we talked about many times on the show, you're selling already at that point into Monday, if not Tuesday, the way things are working out these days. So if you wait until that last minute on Friday, by all means, do not. For the love of God, don't do that. All right, moving on to this one comes from Bob, just Bob. He writes, I've heard pros say, this is an oft-repeated adage, I've heard pros say that when there are too many retail jump into a trade, then do the opposite. Does that apply to options as well. Well, Brian, you're kind of the retail advocate here on the program today, so I'm gonna put you in the position of defending retail. What do you have to say here to our friend Bob, who thinks when all the retail lemmings are in, he wants to jump ship?
Well, in general, a lot of people believe that both theories apply in the stock world and in the options world. That's actually where the first put-call ratio really came from. I don't believe put-call ratios are what they used to be, but back in the day, whenever you saw way more puts than calls, a lot of people would say that is a negative in the marketplace because you're seeing a lot of, and they would take it as a retail type index. And in general, I don't think the put-call ratio means that as much as it used to, as a actual leading indicator as to if the stock is going to come back or a specific index is going to come back. But it still does apply that when everybody's selling, and by everybody we need retail and even institutional investors, when everybody's selling, the concept that everybody wants to be, that you really should be buying, that's when you really need to jump in. And nobody's done that better than Warren Buffett. 2008 was a great example of that. When everybody in the market was buying, he was doing deals he was doing deals left and right. And I still think that applies no matter what market that you're in overall.
It also helps to get paid a nice, 20-30% premium to sell out of the money puts in Goldman Sachs. I'll take that Buffett premium any day of the week. That's a nice little cushion on those trades as well. But I see what you're saying there. Mr. Rock Lobster, you educate them their retail folks all day long. Anything you want to add here? Or do you perhaps agree with Bob? When the retail get in, get the heck out?
Oh, well, you remember how the skew in Apple used to be? It was inverted on the upside.
It was awesome.
It was the buyers would come in. I tend, we try to talk more vol reversion trading, so we are mostly trying to take the opposite side of most things. So, I think a lot of what we try to do is fade a lot of the hype. So, in a way, I think you want to fade. You want to fade a lot of activity that seems to be following the news, because a lot of times it seems to be a little too late to the party, let's say. So I'd have to say, yeah, in general, you want to fade some things. I'll tell you what, though, was interesting about last year is look at the stampede out of mutual funds last year. So an interesting and maybe timely exit. So maybe sometimes retail can be right.
Yes, they have their moments. They're not all just piling into Apple skew. Those days were impressive for a number of reasons, and we get a million of different types of questions on this same theme. So we'll have Nina represent for the rest of them who wrote in something similar to this. It's kind of the corollary to what you were talking about earlier, Uncle Mike. She writes, "Hey, is this a good time to buy calls on indexes? If so, how far out should I trade?" Well, this is kind of the $10 million question everyone out there is looking to know. Of course, it really depends on your market outlook here in this time. If you're a big buyer that there's more downside to come, then perhaps calls not the way you want to go. Whereas on the flip side, if you think these are value moments, then perhaps there are some. Uncle Mike, you're kind of our resident bull defender here on this case. You were just talking about selling puts earlier, so I'm guessing you perhaps would be a proponent of perhaps buying some calls or perhaps at least some verticals or things like that. And if that's the case, how far out would you like to go?
Funny you should mention that. I think if you did go out right now, let's say that you had very minimal exposure to the marketplace going into the year, or you, let's say, got out right away when we turned negative on the year a couple weeks ago, I should say, then I think right now it would be a good time to buy some calls or a call spread, perhaps all the way out to December, which, as a matter of fact, I did recently. I took a half in my SPY call strategy. I took a half position, not a full position, but a half position in a 205, 225 call spread out in December. And the reason for that is that if we continue to go down further, I'm pretty tightly hedged, meaning that I will pull the plug very quickly if we go below like the 180 level, to where it's really not going to be a huge deal. in terms of the loss because it's a half position. However, if we do make it back to even on the year, and yeah, it could happen, we could rally another 10% over the course of the next week or the course of the next couple weeks, then we're kind of right back to where we started. And I just got in on all the upside for the market for a much more discounted price for the year 2016. I know that if I were to buy an at-the-money call at the beginning of the year, it would have, for an entire year worth of exposure, it would have cost a lot more money. So right now, for example, a 185 call for the December week 5s, the end of the year options, that's trading in the high 14s. And I got into mine for $4.70. Now, yeah, the marketplace does need to come back a little bit, but I've managed volatility risk by creating a spread to a point. And with that, if the market does come back and we do have an up year on the year, I just got in at dirt cheap levels. So I think right now, what should be done if you're looking to do something and with a call option, I like the idea of buying an out of the money call spread because of the fact that it's lesser amount of risk. And I know you're saying, well, Mike, we have to come back over 10% to get to where you actually bought that call option. Well, we went down about that much in 3 weeks. This is the type of market that it could come back very quickly. And you might say, well, Mike, you paid a lot for implied volatility. Well, yeah, I did, but I did spread it out by at least selling an out of the money call option against it. Now, if the market does continue to go down, then I'm out of it. That's my risk management on it. But if it goes higher and volatility comes down as it's going up, I do have that short call option in my back pocket to kind of help me out. So my thing, if you're bullish, I think buying out of the money call spreads is a very good consideration in this marketplace.
Selling puts, buying calls, willy-nilly. What have you done with Uncle Mike? Who is this person?
We're slinging it, baby.
Slinging over there on the dark side. I love it in St. Charles. That's all the time we have for the mail block this week. Keep those questions coming. We love to hear from you guys. Now we have to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block. You guys know the song and dance. This is where we watch what's coming, tell you what we're watching for the rest of the week into the old weekend. And I could tell you, hey, GE's coming out tomorrow, and et cetera, and that might mean something to you, but we all know all of our gazes are pretty much firmly fixed overseas on that crazy mess known as China, as well as with some of the international, the ECB, and of course the Fed and everything else. So as much as we may want to keep our gaze here on the old tangible things like earnings in the domestic markets, it seems like we're being pulled farther and farther afield. That said, one final time here on the old program, Brian will give you pride of place as our guest. What are you watching for the rest of the week into the weekend?
Rest of the week into the weekend. Well, if I look at the marketplace as a whole, I guess I'm looking for vols they got to get down below that 20 level eventually. As Andrew was actually pointing out, when you look at the futures, I mean, I pulled up the Feb futures, I pulled up the Mart futures, they're still around 25%. So you want to do something fun? Let's sell some volatility in the VIX index, in the actual option contracts. I can't believe not only that the spot, I can understand being up around the 26. Well, actually, where are we at? It came down a couple of percentage points. Let me pull it up here. We're at 26.69, and we're seeing the February futures still around 25. So you could even sell some Feb futures. You could sell some March futures. I just think that number has to eventually come down if the market just stabilizes. You know, we just don't need to have 3% moves in the SPX. So if we get just maybe 1%, we're going to start seeing that VIX index coming back down towards that, especially in the futures, towards that 20 level.
Uh-oh, selling VIX, that's fighting words. Rock Lobster, take the other side, quick. Point, counterpoint, go.
Well, I guess, is it my turn now?
Yeah, go for it.
You said Rock Lobster. I was just trying to make sure.
Isn't that what I said? Yeah, I said Rock Lobster.
Okay,
that would be you.
Anyway, the 360-day realized vol for the SPY is 15. Last 2 years, it's more like 11. So like I said, the source of the volatility has yet to reveal itself, and I'm not a large seller of volatility until I understand why the market's doing this. So, that puts a floor on volatility now really at around 15, 16. So we discussed, 15 is the new 10 last year, and right now it's appearing to be a good call. And until I see something different, that's what we got going on.
Yeah, if you learned anything from Star Wars, is when the dark side reveals itself, a lot of things can go wrong. So maybe you want to keep some ammunition in your back pocket for that moment when it reveals itself to the world. Now we turn our attention a little bit closer to home. Uncle Mike, what's catching your eye for the rest of the week into the weekend?
We have that fruit company that has earnings coming up, so I'm excited to see that. And I've been saying how tempting this stock keeps looking to me as it continues to go down, but it's looking even more tempting, but I still can't quite make myself pull the trigger on doing anything with it. Apple earnings coming up, I think it'll be very interesting, but once again, they need to start innovating some things before I'll really jump on board. But with it this low, might be a little. It's a spec, so what the heck? I might start looking at it again, but I've been saying that for a long time. No promises.
I don't know who you are anymore, sir.
It's just different.
All right. And with that, we'll have to leave it there for this episode of the old option block. But before we go, let's check back in one last time with our cohorts, our partners in crime. I know you got to run, Mr. Rock Lobster, so really quickly, what's coming down the pike in the land of the pit?
We have a Fixing Broken Trade, a webinar this weekend. Again, for the price of an 1/8 on a 10 lot, you can learn how to trade and manage positions when things aren't going your way and why you might want to do them. How to manage your risk overall. And that's what we got.
There you go, listeners. Surf on over to optionpit.com to learn more. And Uncle Mike, plug that book. Where can they go find themselves and get long if they really want to?
They can go to Amazon and purchase it on Amazon. Go long, new option strategies for buy and hold investors. $2.99. I guarantee you will learn something. And if you don't learn anything, I will give you a 10-fold money-back guarantee via a credit to an RCM fee in some way, shape, or form. I know it's not a lot, folks, but hey, you will learn something. It's a good book.
It's only $2.99?
It is only $2.99.
Oh my goodness. Everyone should buy 3 copies. Send one to your friends. List $2.99. Uncle Mike, think of all the joy he's given you on this show over the years. You owe him at least $3. Send him $3. Buy the book, send it to your friends. New cover and everything. Even if you have the old one, get the new cover and the new forward. It's good stuff. And last but certainly not least, Brian, we get to tune into you every week over there on Options Playbook Radio. So what's coming up on that, as well as what's cooking in the land of Trade King?
Well, okay, let's start with Options Playbook Radio. We've gone through a lot of the strategies, so we're talking about specific paper trades, stuff that's interesting in the marketplace. Recently looked at Amazon, which we talked about a lot today, and Amazon's going to be announcing earnings next week. We'll probably explore that a little bit more. As far as Trade King is concerned, we just completed a merger. We bought another little brokerage firm called MB Trading, and that's all in place now, and we're a proud owner of a little brokerage firm now called MB Trading. So you can check that out. It's still going to trade. The accounts are still going to stay under that name for at least a year before we merge everything over into the Trade King name. And on Options Playbook on Amazon, we actually ran a special into the new year where we're actually giving away the Kindle version for about half price. We're not quite down to the $2.99 level, but right around $10, you can get a Kindle version of the Options Playbook and follow along every Thursday on Options Insider Radio.
Not quite $2.99, but still a pretty darn good deal, listeners. So check it out over there. And of course, you can get all the content. Brian walks you through literally all of the content in that book. So if you haven't checked out Options Playbook Radio yet, do it from episode 1, because he's going to walk you through page by page that entire book. I defy you to find yet another option book out there where the author sits down and explains all of it page by page for you in exquisite detail. Check it out, listeners. You can find that, of course, wherever you find this here program and all the other fine programs on the old Options Insider Insider Radio Network. And on behalf of Brian and the Rock Lobster, Brian, a.k.a. the Options Guy, so he has a nickname as well, and the Rock Lobster, and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and all the other fun stuff you do. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.